Okay, and we are live.
Yeah, we are.
Okay,
We we have two Emmas.
okay, let's see
There we
how
go.
this works. Okay, yeah, this is perfect, right?
Yeah, yeah.
Yeah.
We figured it
Okay.
out. Okay, right
Hi
on.
guys, G Spice, welcome, welcome. Sorry that we're starting a little bit late, a little bit later than 7 minutes. We had a bit of technical issue trying to go live, but we are happy to have you here with us. Thank you once more for joining us in again. So we're just going to give about a minute or two for more persons to join us in. And of course, we do have a special guest with us here today, but we're going to dive right into that shortly. If you know there is anybody that needs to be here, make sure you tell them to join in, share the link, let them join us in. So what I'm going to do is I'm going to take a minute to brief the community so that they know that we have started here. Then we're just going to go right into it.
Oh
Okay,
yeah.
give me a second. Code tweet this. Okay, at the moment, the community is already informed that we've started. So let's just go into it. Welcome back to another Spicy Takes. This is episode 18. And today we are tackling one of the hottest narrative in crypto right now, RWA, reward asset. I'm thinking this is about the third space we are hosting on our reward asset related space so far since we started Spicy Takes. And we know that when it comes to RWAs, there's no need for us to do a reintroduction because we've had up to like three spaces on it so far. So I'm very sure that we are conversant on that already. But we all know that,
Did you lose her as well here, Mark?
Yeah. I didn't know if it was just my connection.
Oh, okay, yeah, no, I think we're good here, so we'll pick it up where she left off. Yeah, we've talked about RWAs a couple times. I've shared a lot of my spicy takes on the matter. I think it's pretty obviously one of the most exciting sectors. And I wanted to kind of get your thoughts on how you can contribute to the sector and where do you think it's headed?
Yeah, definitely. So I guess I'll start with the second part of the question, like where it's headed. I think with it's definitely a narrative that companies have been pursuing for quite a while now, like for multiple bull cycles. Like people saying, "Oh, now it's time for RWA," and it hasn't really quite hit yet. I think now it finally will. Just with like this rise of stablecoins and stablecoin legislation passing, I think crypto is becoming more mainstream. Even like for non crypto native people, like these businesses now that are exchanging stablecoins because it's cheaper and quicker. But like I think there needs to be something to do with those stable coins now that like a lot of capital is coming on chain. And I think RWAs is like the next big thing. And there's just especially with my former investment banking background, like I've seen so many limitations in I guess traditional finance. Like even small things like how you can't even exchange like stock one for one. Like oh, I'm gonna exchange like Apple for like Tesla. Like you can't do that. Um, and like with self custody and whatnot with like wallets and being able to hold your assets, potentially send them to your friend like as like a gift, like almost like Venmo. Like just so many cool things you could do like on the blockchain. Now where we come in uh, is I guess a couple places. One is that we think that it makes sense to provide access to I guess investment grade US assets and other US assets to these emerging markets that might traditionally have trouble accessing them. The blockchain obviously makes it pretty easy and accessible. I think the second piece to that is from the institutional side. In Web 2, a lot of these like large institutions, they hold their capital in obviously like cash, but then also like T-bills, money market funds, ETFs, and then if you have a lot of reserves, even equities. And so now that these like Web3 institutions are growing pretty large, I think it makes sense for them not to hold all their capital in ETH, Bitcoin, or Solana. They want to get some safer exposure so that they can pay for operations and whatnot. And that means like A, holding stable coins, then B, holding T-bills and money market funds. But then the next big step is ETFs and then even single name stocks. So that's what we're trying to do.
Yeah, I totally agree. I mean, there's a couple points made there. I definitely agree that like RWAs is really the sector that most people are going to use. Like just because the tech is awesome and we have all these assets that you can do really cool shit with in crypto doesn't mean that the rest of the world actually cares to use these assets and do the things that you can do with them. But if you give them the assets that they're already holding and then you tell them there's a new way for them to generate yield or they can swap directly from Apple to Amazon, like you said, now it becomes really interesting to the rest of the world. Going back to that example, what's like the benefit to the user if they can swap directly from Apple to Amazon as opposed to having to sell their Apple stock and then go and buy Amazon shares?
Yeah, I mean, I think the I guess the pros are like not that extreme, but I mean, it's definitely a little bit cheaper, right? You don't have to get hit with the fee from selling the initial stock and then get hit with the second buy fee. I mean, I'm sure like institutions could then double the fee for just a one-to-one swap, but it's also just much quicker, more instantaneous. Um, it's just like a much cleaner user experience. I think that's like the biggest thing I'd say.
Yeah, which doesn't sound like a huge deal to like maybe the average user. Like the average person doesn't maybe even check their fees or care if something gets executed in 1 second or 5 seconds. But the institutions that are trading in volume do care about these things, right? Like the
Definitely.
hedge funds, they're buying the building as close to the broker as possible to get like a millisecond quicker on their execution time because they're running algorithmic strategies. And every fee that they pay is like cutting into their margin when it comes to these strategies that they're running. So I think crypto presents such an interesting opportunity for entities like that. And like we haven't even really begun to see those entities actually trade on the blockchain and leverage the power of the blockchain because it's going to be a superpower compared to like the traditional system where you're only allowed to trade during certain hours, you only have liquidity during certain times.
Mhm.
Like all of these things are so contingent on other parties in the market, and that's really what DeFi does, is like takes out the contingencies on other people, right? And I think that's going to be more powerful than people are expecting to the hedge fund, and it's going to be a much bigger deal when those hedge funds start to move in and create these algorithmic strategies. So is that some of what you guys are involved in enabling, is like the large institutions who might be trying to execute these types of strategies?
That's definitely the goal. And I totally agree with everything you said there. It does matter from an institutional standpoint when you're dealing with large, large volume. But yes, definitely that's the ultimate goal. Ultimate goal to be able to tap into like the large institutions. That obviously there's just much more money there, and I'd say potentially, at least initially, the use case is a little bit more straightforward. But I think like still from the retail side, there is just like so many like pros like to what you said. I think people don't realize they're just like, oh, like the markets are constrained to these hours and this is how it has to be. Like they don't realize like it doesn't have to be that way. Like it's so easy for it not to be that way. And I think like one other like cool use case I see with like DeFi versus like TradFi is like if you have a Robinhood account, sure you can lever up, take on a little more margin when you're buying your Apple or Tesla stock. But in DeFi, as you know, it's just literally the click of a button and it doesn't have to be like levering up, right? You could actually use your asset as collateral and pick out a loan. So I could be like, all right, like I have all $10,000 in my, I guess, yeah, take $10,000, put it into Tesla stock, right? Um, I have, I'm really bullish. I think over the next few months, it's a lot of upside with like these humanoid robots, but I'd have no like liquidity right now, and I need to pay rent. It's so nice that like in DeFi, I could be like, all right, like I'm gonna just take out 2 grand to pay for like the next month or 2 months of rent, without having to lose the upside of like my Tesla stock.
Yeah, which is honestly like this is how rich people live, right? This
Yeah.
is this is how like the 1% does it. It's just it's not that available to the rest of us, or we either don't know how to do it, it's too difficult, or we just straight up don't have the access to do it. But the Jeff Bezoses of the world, right? Like what they do is just take out a loan against their share value, and then they use that to pay for their rent or whatever they need to pay for, and that's actually how most people, if you make a lot of money, operate. Is like they take on debt on purpose. It saves them on taxes. It's easier. They get to retain ownership in the companies that they have. So I think like kind of democratizing that, allowing the average person to do that easily is super powerful. It's probably pretty destructive, and maybe some governments and banks are a little scared of that. Even in like the States with the stablecoin bill that just passed, it seems like, at least from my point of view, it seems like there's a bit of fear of stablecoins taking over market share from banks, and they're trying to regulate it in a way that stops that from happening. Um, and what I mean when I say that is like mostly around them limiting what the stable coins that are allowed can do. So like they can't redistribute if they invest in like T-bills, they're not allowed to redistribute that back to their holders, is my understanding of that bill that just passed a couple of weeks ago. Did you have a chance to kind of dive into that stablecoin bill, or like wrap your head around the things that were basically enabled and not allowed in the US when that bill passed? And do you think I'm kind of on the right track there, or do you have your own thoughts on it?
Yeah, I mean, I definitely dove in a little bit, but honestly, I need to dive in a bit deeper. Like my understanding obviously just provides.
For the record, also didn't actually read it. This is like I'm taking the information from Twitter. So if I'm wrong, you gotta let me know. But yeah,
No,
proceed.
no, I remember hearing that. I've been just kind of like listening to podcasts on it and doing my own like a little bit of due diligence, but I need to dive in deeper. I definitely do think a lot of good does come out of it, just because it provides a lot more clarity, which obviously there's a clarity bill, a lot more clarity like on like allowing stablecoins. So a lot of these businesses now don't like know what they can do, what they can't do, and so like there's a lot less ambiguity there. So a more clean path forward, I guess.
Absolutely, yeah. And can we take a step back for a second? If you could give us like an elevator pitch of what Spout does, and just kind of top to bottom for everyone that's listening, because I
Exactly.
didn't give you the opportunity to do that before
Yeah.
I started getting into it with you. So
Yeah. Yeah.
Yeah, yeah. So
Yeah.
Spout is tokenizing U.S. equities and bonds, so bringing them on chain, offering them to emerging markets and institutions. As I was talking about before, like from the emerging market standpoint, it makes sense because some of these emerging markets might have trouble accessing these markets traditionally. And from the institutional standpoint, it makes sense because they don't. These on-chain institutions are making a lot. Some of them are making a lot of money on-chain, and they can either hold it in these volatile crypto assets, which, I mean, is not ideal when you need cash on hand to be able to pay for your daily operations. Um, and Web two, like usually we park them in these funds in safer assets, like I mentioned before. The problem is if you're an on-chain institution, there's a lot of friction having to off-ramp your assets. You get taxed immediately. You have to then park it into a brokerage account, and then if you need to pay for operations, you need to sell the assets, bring them back on chain, and keep going back and forth there. With what Spout's doing, you can just stay on chain the entire time, take your funds, park them in the assets, and you don't even need to, like I said before, you don't even need to liquidate them. You could just take out, like through DeFi, like just take out a loan on them. So if you're holding the QQQ, you need a little bit of cash on hand to just pay for like a vendor that month. Like you can just use that as collateral and take out a quick loan.
that's cool. And then what assets are you guys primarily focused on? Is it equities or stable coins you mentioned for sure?
Yeah, initially it's going to be equities, so ETFs, stocks. We're coming out with we're like starting off like a pretty simple product suite. We have 22 assets that we're initially offering. It's just like 10 major ETFs that we think could function as strong collateral, and then 12 stocks that were, I guess, most heavily traded on X stocks the previous month, as well as a couple like stocks, the Magnificent Seven that weren't included, and as well as like more crypto, I guess, friendly stocks like Bitmine, for example, Amber.
Okay, cool. And then so how does the end user, what's like the user experience when somebody first shows up to your app? How would a new user basically get access to the app and then use it?
Yeah, so we're trying to like do everything uh, with like U.S. legislation in mind, and I guess all countries' legislation. So you have to
Mm,
create your account, you pass through a KYC uh, process, and then you're good to go. You can trade any asset after that. It's just a one-time thing. But there is a KYC process because the tokens are permissioned. From there, you can then swap like whatever stablecoin you want, whatever asset, similar to like what it looks like on a DEX, um, for whichever like equity you're trying to purchase, or whether it's Tesla, the QQQ. It's just a swap. We have a custody-based model, So once you do the swap, the order is submitted through our off-chain broker, goes through a clearinghouse, the asset is then purchased, held in an account for you, back one to one, the token's minted, and then held in your wallet.
Oh, super cool. So you're actually buying the actual equities in real time when the user is using their crypto
Exactly.
funds to purchase the tokenized
Yeah,
version.
it's instantaneous. Happens very, very quickly.
Okay, cool. And that, I mean, that's not you correct me if I'm wrong, but I don't think that's typical for RWA products in the space, right? Where it can happen in real time like
Yeah,
that.
no, it's not. A lot of companies are doing differently. Like, I think the custody-based model makes the most sense. It's easier to bring products to market. It's very straightforward for users to wrap their heads around. But then you have companies like Superstate that are creating these investment funds, which requires you to create like an offshore entity for each product that you then launch. It takes a lot longer. The margins are a little bit better. That's the
Hmm.
upside, but it's a little bit different.
Yeah, definitely. It's I mean the depending on the difference in those margins, obviously like you're gonna serve a different market than they would. But I think a lot of what crypto users are craving is just like an easier way to do things. And then fees is kind of something that comes into play way down the line once everyone knows how to do all of this stuff. But for the time being, I feel like that's probably the largest hurdle, aside from like there just not being the assets that people want to use in DeFi, is like the actual user experience being really tough to the point where like a smart person, like, my parents are very smart people. They've done really well, but if they ask me what my company does or how to use crypto, like they just get scared when I try to explain it to them. They're like, "Oh, that sounds terrifying. I'm not going to do that." So I think asking people to go through a lot of hoops to get to like the solution that you're proposing for them is a no-no right now, and it's not something we can afford to be doing while we try to onboard users into this industry. So I think products like you guys that just make it super easy, and like you're handling all of it for them so that they understand is I have this thing, I want to buy that thing, and they just do that, right?
Yes, exactly. And I totally agree with you. I also feel like I'm surrounded by a lot of smart people, but I like almost none of them know anything about crypto. And when I try to explain almost anything else, whether it's DePIN or like GameFi or like anything else in crypto, and even NFTs, like just do not understand it whatsoever. But when I explain this and the use cases, like it's like very easy for them to wrap their heads around. Like, oh, that makes sense. That's cool.
Yeah. That's all. What about you, Emma? Like for us, we're on the other side of the world from you. Like are people around you savvy enough to know what it is you do at work, and
Mm.
like are they scared when when you try to explain it to them, or
Mm.
they're interested?
Very, very much interested. Probably because people around me are mostly young people. And if we check on the charts, Africa as a whole should be one of like the top crypto inclined or interested, crypto interested people. So it's really not out of the norms to see, them easily understanding what you do. So you don't really need to like, they are very curious. I see most people has very, very curious minds. You see most people telling you, oh, please explain to me more. I'm very, very much interested. Let me know what you do. Probably because, like I said, I'm surrounded by people of my age who are very, very much interested in things like this. Um, Taking for an example, yesterday, just right on cue, um, we hosted like a tech event that says Web3 for everyone, right? And if I'm being honest, last year that this event was done, we had over 1,000 people and it was a free event. So it was 1,500 thereabout. Now, this year, it was kind of, should I say, a little bit gated where we attached like a fee to it. So I was so scared of the turn up. But to my greatest surprise, we had over 1,000 people. And the major reason why we gated it is because
Nice.
we wanted a smaller number of these people showing up. Let's say just be really, really curious minds. And you could see people showing up and be like, yes, I really wanted to be here because I want to know what's up. I want to. So I would say they are more open minded, wanting to know, no matter how difficult the level might be. Um, Probably because of how it is being structured here, and also based on right now, that is where major things are heading towards tech incline, crypto incline. So it makes it so much easier. And right now, they're even introducing it to the school curriculum. That is the younger generation, and so it makes it. And right now, even the government are being interested because most of the events that are happening here, they're trying to get the government to participate. And another example of that is, let's say, the youth. We have like all these youth representatives, people that are in charge of youth, and they'll be like, "Oh, we are really interested in this. Should we mobilize more people for you? Please do workshop, so that they learn more. Don't just stop it at the event." So I would say for us is they are actually very, 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 very curious minds, and it shows in the chats in general.
That's cool. And yeah, like also in Africa, I imagine there's different use cases that people are excited about for crypto.
Yeah.
Is that the case? Like, because I mean that I hear that thesis a lot, and I'm not like boots on the ground to see
Mhm,
that very much. But
mhm.
is it different use cases that people are excited about in Africa? Like I don't know, I hear like
Okay.
making payments easier and
Yes,
more freedom
exactly.
with your money. Is that something
Yes,
people are kind of talking
yes.
about around you?
Definitely, payments easier should be like the first choice. Like it should be like one of the things that if you provide, you will succeed at when it comes to the markets. Then also accessibility that goes beyond the normal banks we have, which is also still payments, easy payments model with very very little fees. Even right now, I've been seeing the rise of should I say businesses having um should I say the crypto inclined people opening businesses and accepting crypto payment. Now I could easily, and it's easier to patronize this set of people than to go into the market to patronize other people that I'll have to think, oh, should I just change? And so it's a whole lot of like hassle. So I would rather patronize a person that accepts crypto payments, stuff like that. It makes it easier, and we are going more into that as we go forward. And yes, payments is like the very very first on the list, and yeah, basically. And it's really really exciting actually to see the young people really really interested in crypto. But right now I will even say it goes beyond payment, because now once your solution has been solved, let's say payments wise, you are more curious. Okay, what more can this do for me? What other use cases can I get of this? So it really really drives their mind to read more, to want to know more, to want to know how to. And I see a lot of exciting builders building amazing things in the African market, and seeing them push it forward, getting VCs to invest in this thing is really, really amazing. And I'm really, really excited to see how the coming years are going to be in regards to the African market. And I'm expecting to see us like top three if we are not already there. So yeah,
No, yeah,
yeah,
right on. I see a question here on
yeah.
the screen from Dexterity. I appreciate the question, although I'm going to be honest, I don't know what the angle is here exactly. I was going to ask you, Mark, if you know kind of what he's getting at here, and if you have a thought on it. So he's asking, do you think focus on the accessibility of these assets would risk commoditizing RWAs into just another ETF?
Um, Honestly, I don't necessarily understand what the question's trying to get at. I mean, we're tokenizing our ETFs, so um, we wouldn't be creating new ETFs. I mean, although in the future we could, but
Okay.
yeah.
So I'm just going to ask the question from another angle. Our space today is talking about beyond tokenization. What is like the next thing for RWA? Is it accessibility? Is it privacy? Is it yields? We know the yields. Once you hear RWA, the first thing that comes to mind is yields. Now, let's look at it from the accessibility angle. What is the potential of it being very very accessible to just the normal users? We are talking majorly on users, for them to be able to access this so easily. I know you've spoken a little about that. Then also, what are the risks that is involved with this accessibility if we do like mass adoption when it comes to RWAs?
Yeah, yeah. So That's a good question. So in terms, obviously, like most of our audience that we're initially tackling is Web3 native users. So
Mm-hmm.
that's just being able to connect your wallet to our platform. Obviously, there's smart contract risks. Like if the smart contract's hacked and exploited, then you could potentially redeem more of the assets than you actually own, stuff like that. That's definitely a huge risk, which is why we need to make sure everything's audited really well and just everything's super sharp and clean. Um, if we want to attract Web2 native users, which I do think it makes sense if we're going after markets that have trouble accessing US markets, because on the one hand, you could argue that some of these people that are crypto native in these emerging markets would already like naturally more risk seeking. So they might want to get exposure to like Bitcoin and Ethereum and Solana over like Tesla or Apple. And therefore it makes more sense to make it more accessible to Web2, which means abstracting all the blockchain, which is something we're also working on. So that would involve like creating a native wallet on our platform for these users to access instead of having to connect their MetaMask or Phantom. Like you don't want them to have to realize that they're using wallet, but that it's just actually like using like Robinhood or something. But to your point, I think with tokenizing RWAs, something that isn't necessarily a risk in Web2 is that if something happens on the blockchain, it just happens. Like if funds go missing, they just go missing, right? Like there's nothing you can really do about it. Like if you're on Robinhood, right, and something happens, you're like, you just hit up customer service, tell them exactly what happened. It'll be fixed immediately. Like you just can't do that, right? And with the blockchain, that is one of the risks.
Yeah, I think that's why things have to be really robust, right? And I feel like as time goes on, that won't necessarily be as large of a risk. I mean, obviously, always more than Web 2, but I think smart contracts will become robust enough. Like, we'll get quicker at auditing. There'll be more auditing firms available. It'll get less expensive. So you'll pay for 2 and 3 audits. Like, I feel like as time goes on, that's like a natural, growing pain that we'll go through and end up in a place where people aren't thinking about that as much. But definitely for the time being, it is like, I mean, I've messed up and sent money to the wrong place, and you can't get that money back. Like, I think that's kind of that's like what do they call it? Like it comes with the territory for crypto. Like every person that works in crypto and transacts in crypto every day has probably done that once upon a time.
Yeah, definitely. Like I've had one of my wallets completely
Yeah.
drained, and it sucked. I had a good amount of money in it too, but it just that's one of the, I guess the downsides. But
You use a ledger now?
I don't honestly. I should probably. Like I kind of just have my funds spread out a good amount, which I think is one way to maybe mitigate it. But like I
Hmm.
try to log into them as little as possible, just for that
Yeah.
reason.
Yeah, the hotter the wallet, the more risky, right? So you're one of the guys that will set up a new wallet to try a new DeFi platform if they think it's risky then.
Yeah. 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 I think
Yeah,
when you are like a big degen trader, you just have to learn how to set as much wallet as you can when trading. It just comes with the job. And also people who do a lot of airdrops. Yeah.
yeah,
Okay.
I was about to say that, Emma. It's like it almost offsets the amount that you lose your money by getting hacked with like the amount of times that you just get airdropped like a couple $1,000 out of nowhere. That's been my experience
Yeah.
at
Yeah.
least. I think like I'm pretty like I would probably in the positives even from like airdrops received versus money lost from like screwing around on random platforms.
Agreed.
Yeah. 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 True. Okay, I think my last question on this, we've spent about 35 minutes on this, is let's look at like the long-term vision of RWAs, like let's say in the next 5 years. What does, the future, we could see a lot of emerging tech when it comes to RWA, a lot of solutions trying to make it work and all of that. Now, let's zoom out to 5 years. What does this RWA ecosystem look like in general for you, Mark?
Yeah. So I think it's kind of like a 2 steps. So like within the next like 2 years, I think it'll just kind of be improving everyone and everything like crypto native. So like I said, like having these institutions able to access these safer assets where they could like loop T-bills or potentially like get into like I said Tesla, the QQQ, but then maybe use that as collateral and then get some crypto exposure. So just being a little bit more efficient with their reserves. But I think after that, it's about just completely revolutionizing like traditional financial markets because I think most of the world is moving so fast, especially with the rise of AI. Like I come from like tech investment banking, so like everything I saw
Mhm.
like industry is just moving a million miles like per minute, whereas like traditional like financial markets are just like staying stagnant like, to what they were in like the 1940s, which is kind of weird. So I think the next step is just showing like the world realizing, oh well, like I can like trade after hours, after traditional market hours. I can self custody all of my assets. I can easily take out a loan with a click of a button and borrow, pay my rent. I think that's the next big phase, and I honestly think that'll happen in the next 5 years, personally.
Yeah, honestly, like to that point, I can't imagine there being like let's say two hedge funds are competing against each other, trading the same assets, and one of them has access to all of the things that you just stated, and the other doesn't. They're on the traditional system. Like, I just can't imagine outperforming the person that has access to all of those
Totally agree.
things.
There's no way.
Can't imagine them. Um, but yeah, I think that's a good place to wrap it up for
Yeah.
us. I want to leave you the opportunity, Mark. Like, let the community know where they can follow
Oh,
you, how they can help you guys out,
let
what they
me
should check
do
out, what
that.
you guys have coming up.
Yeah,
Yeah, anything that you got coming up that you want everyone here to know
Yeah.
about. Now's your time.
yeah. So we're really like ramping up. Unfortunately, our site like horrible timing just went down like yesterday or something. It should be back up very shortly.
Shit.
We had like too much traffic. We were part of this like marketing campaign. Too much traffic too quick. Um, Now we're going to be built back stronger. Should be back up like tomorrow or so. But yeah, like once it's back up, like come go to spout.finance, just test our site, give us any feedback. We want it to be perfect. Like literally give us any feedback. Join our Telegram group, which is in our Twitter or X bio. Obviously follow us on X. Um, and yeah, like mainnet probably pretty soon. Like honestly, like in a month, about a month's time.
Right
Yeah,
on.
that's pretty much it.
Well, you'll be busy. You'll be busy then, and that's a bullish signal if the website's coming down from too much traffic. So happy
Yeah,
to hear
yeah,
that.
definitely a good problem to have.
Awesome. Well,
Thank
thanks for coming,
you.
Mark. It's been a pleasure to have
Yeah,
you.
Thank you so much for
I'm looking forward to
joining.
your guys' mainnet
yeah. Thanks
launch.
Yeah.
guys for having me. Matt. Yeah, like
Guys, follow them. Their link, their username is on the screen at OX Spout. So give them a follow up on their journey. Stay in loop with their roadmap and read up on what they are doing. Amazing, amazing work. Thank you guys once more for joining. Thank you, Mark, for being here. Thank you, Matt. It's always a pleasure doing this with you and to our wonderful community. Thank you for constantly joining in and inviting people to be here. And yeah, see you next Friday for another spicy takes. Bye, guys. Stay spicy. Bye.
Stay spicy, y'all.